It is Tuesday, July 27th. Good morning, everyone. This is Nadex Morning Analysis. I am Todd Rich with Nadex. With me, Brian Caprice from Keep Trading Simple. We are going to identify some potential hotspots throughout the day. There's a lot of things that we'd like to just bring to your attention, places that you want to be looking when you might want to be looking there for potential trading opportunities. Before we do that, I need to share that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. Now that we got that out of the way, what have we got going on? Markets are a bit flat. The Dow a little red after everything sort of touching near all-time highs. Today could be an interesting day, particularly for the NASDAQ. Keep an eye on the NASDAQ because today after the close, we've got Microsoft, Apple, and Google all reporting earnings. So the NASDAQ might be in play today a bit as people prepare or put some positions going into those large tech earnings. What else do we have? 10 a.m. this morning, consumer confidence. That number comes out. We could see some movement in the market. So 10 a.m. Eastern, you're going to be wanting to take a look and see what's going on and be ready for it. I'm looking now. We can look at crude oil. Been trading range bound a bit, which is kind of interesting for crude oil because it has been all over the map. Oil's been all over, and now for the last couple of days, we're a little bit range bound. Interesting to kind of see that. And then tonight, this is a lesson in getting ready and preparing. Australian inflation comes out 9:30 p.m. Eastern. So tonight, trading isn't just during U.S. hours. You want to, if you're looking for opportunity when there might be some volatility, there might be some volatility in Australian pairs like the Aussie yen or the Aussie dollar. I know today, Brian, you wanted to actually talk a bit about FX. And we're also doing the full-blown session in 3 hours, 3 hours and 15 minutes. I'll drop a link in if you're not registered, where Brian will go through all of the markets, all of the charts, and do some deep dive analysis. But for this one, I'm going to flip it over to you, and let's just start off. We could take a look at the pound yen, and maybe we'll go look at how you might want to start considering thinking about the Aussie for tonight. And then make sure that everyone comes back in 3 hours for the full-blown session.
Yep, sure. Sounds great. So again, looking in...
I didn't mean to do that. I put you up there. I wanted to put your screen up there. Sorry.
Not as pretty as the chart. So yeah, looking in the last 24 hours as far as movement goes, you're seeing basically dollar weakness more or less pretty much across the board. There was some comments made that the Fed may be changing their policies slightly, and that wasn't necessarily positive for the dollar. You would think that if they were changing their policies of no action to some action, that it would be great, but the European traders have really sent the market just straight down. So, euro, dollar, pound, dollar both down, dollar, yen down pretty big, dollar, Swiss down pretty big, dollar, CAD down, Aussie dollar up, again, because the dollar's in the second position. And then really the euro, pound, pound, dollar, really not, or the pound, yen, not that much movement, although there was a great trade set up. And again, you're seeing right now on the 24-hour spectrum, a red digit, but then the 60, 15, and 5, actually the 5 just switched, but you're seeing green there, meaning that we're showing a bit of a reversal. In the overnight, again, not a lot of news. We did have the durable goods at 8:30 come in, and again, both those are pretty negative. They are considered lower impact, and again, typically when you would see something like this and you see red, you would say, oh, that's dollar weak. Well, guess what? That's at 8:30. At 3 o'clock in the morning is when European traders started sending the dollar down, so it really didn't have too much of an effect on the overall market. As far as, again, removing a lot of the lower impact news, you can see we have consumer confidence at 10, as Todd mentioned, and again, it is supposed to be lower than what we saw previously. At 123, though, 124-ish range, it's still not in a situation where we need to worry. It's not like it's like breaking 100 or anything like that, or any of these, bigger numbers. It is still quite high. And again, even if this is a miss to the downside, with durable goods, it may kind of, it may send a ripple through the markets. Again, the markets had some pretty identifiable patterns. If you guys want to go through the indices today, that'll happen at the noon kind of presentation. But 9:30 tonight is the CPI, and again, CPI is the hot button. It's the major thing. Everybody's talking about inflation. It's a quarter-over-quarter figure. It is expected to go higher yet again. I mean, obviously, transitory means something different for me than everybody else, but we're seeing it. New Zealand said that there was a 90% chance of them raising, and then again, COVID kind of may have messed that up again with some of the spikes they've seen. But in Australia, again, seeing yet again both trimmed as well as that CPI figure, both expected to be higher. And yeah, there is a COVID kind of surge there, like it is everywhere else. But again, the country is not in jeopardy of basically sending everybody back home again, going to square one again. And the question is at what cost for inflation? So, that's a big figure tonight. I've mentioned it in the past. There's so many different trade setups that occur at 9:30 p.m. And again, if you're not looking at it, again, you're just throwing away good opportunity, because again, these trades at 9:30 at night, they don't have the U.S. influence into it. It's purely an Australian type play, and Nadex does have Aussie dollar as well as Aussie yen that you could trade both in binaries, call spreads, and knockouts, as well as the shorter duration contracts that I like. So I would watch out for those. As far as where we start with the FX situation, I think it's important to talk about how the European traders have sent the dollar down. This is the dollar index since basically about 3:30, 4 o'clock. That's where this green candle came. It was right at 4 o'clock. The dollar's been kind of shot down. And again, the numbers don't necessarily matter as much, but we do know that this is an area last time where buyers had stepped into the market right around this $92.50. Now, it had been hit a few times. This technically was hit 3, and again, it touched again, but 92.50 is a psychological level, so it is a little bit more resilient. I would expect, and you're seeing it already kind of retrace a little bit, but this is going to be a level where, we definitely had some buyers. Below this, we got quite a fall down to the 92, or really down into, let's see, where did it go? There we go. You can see right now where current price is. We do have a little bit of a fall after this, but this is a lot of movement in one direction, and then profit taking typically kicks in. And that's why I'm kind of bringing up some of the trades that we mentioned. I will start, I guess, with the Aussie dollar. So the Aussie dollar yesterday, we were sitting here, and we were hoping that we could get it to rally all the way up to that 74.05. It wasn't the case. At about 11 o'clock yesterday, and again, 11 is right after that kind of reversal time frame where you're really expecting reversals. If you look to the left, there were sellers stepping in there, so it's not necessarily surprising. There was your trade setup from yesterday, and happened late last night at about 9 o'clock-ish. Since that time, it drove down, and what's interesting about this, and this is kind of that learning piece of the component that we put in, we had these two areas where we were talking about they were targets to the downside. Whoops, I didn't want to move that one. Last time, yesterday, right, we saw this little bounce off this lower level. We talked about basing. It pulled back again, that little old Harry Potter trade there, pulled down and then took off, and this is where we were yesterday. You can see it was basing in there again. It went up. It put that failure to go higher in. We knew we had some sellers in there. Again, it dropped down. It ended up slicing through that channel, grabbing that same level again, and this just happens to be the European Open. You may say, European Open, Aussie, dollar, neither of those are European. You're right, but guess what? That's the start of the FX day as far as kind of like what the general consensus is. Running into a level where buyers were, there was basing. All it did was turn and run back up again, and look at that. We had basing in the same exact area yet again. So right now, I would say with the price rallying up again, this is a dollar weakness-based trade. We are at an area where there's a bit of a reversal. I do expect there to be probably a bit of a continuation once this opens up. Again, the core durable goods is not big, but it is still like a little bit more, it's adding a little bit more fuel to the fire there. If we can come back up to that level, there could be a potential trade set up. And this is one here at 73.86 that if it gets up there around that 10:30 window, that's where I'd feel more comfortable taking it, just because that's where we typically see our reversal in the morning after the open. But that would be the FX, the Aussie dollar. And again, we'll break the Aussie yen down, both the Aussie dollar as well as the Aussie yen for tonight's trading at the noon session. Pound yen is another one that I wanted to talk about because we mentioned the pound yesterday and the profit taking that we expected. Yesterday morning at the open, we saw this big rally up, and we were sitting here. We said, hey, listen, profit taking is going to come in. Right, we know that it'll be there eventually. We're looking for that 52.49. Well, it did. It came back up about that 9:30 time frame. It hit it and kind of spent most of the day there before kind of falling back to the downside. One of those things. It's just decent trade setup. It's past now, but what I would say is as we are getting this profit taking from this early morning movement back up again, you gotta kind of watch, top and bottom, what's potential, where's the next potential for this one. I would say that top level, although not ideal, there is probably another trade setup sitting up there just because of the explosive nature of this push out. And I would say watch out probably for this level right in front of it, right? Actually, let's move this out of the way so you guys can see it a little bit better. Okay. Um, just based off of this little pattern right here, again, we already know there's a larger time frame zone there. There's another one sitting there right in front. So again, I always like to kind of give you guys the brackets. You can decide if you want to wait for it to go long or short. But 152.40 on the top side, and then the bottom side would be 151.35. Have not made it yet. Still fresh and untested. So I think either one of those two will be good. And again, both of them are well within reach. This is 40 pips, and this is 56. This is a daily ATR of over 100. So both well within range there of being able to take off. In regards to that too, let's go across the gold because that's been the other one that has had big movement. Yesterday we were sitting up top. We talked about watching out for this level. It's been a big area where price just keeps bouncing off of it again and again and again and again. Well, look what it did. It came down and basically at about 12, kind of just started sitting there and it just started chopping back and forth. And this is what, when I talk about hairy candles or ugly candles, this is pretty much the definition. I got that. They're like, what does that mean? I know I have some weird terminology, guys, but those little caterpillars that walk around that have all the spikes to make birds not eat them? That's basically what this looks like. It's all wicks. It's very, very few bodies. And again, what it did is those buyers stepped in and punched it higher. And now we're kind of back in an area where, again, we could potentially see some shorts. We know that, there were shorts coming in here at, 1807. What could be the catalyst for this? Well, I mean, right now it's already starting to pull back. But consumer confidence, again, if it does go down a significant amount, that could be one of those things that people are like, oh, I mean, we're not going to do anything with inflation. It's we're not touching it. We're not, because remember, gold is a hedge for inflation as far as kind of what interest rates are doing, not necessarily just the inflation that supposedly is going to disappear. It's got to be long-standing inflation. So bad consumer confidence would also be probably a catalyst to send this back down again. And if it does, I'm assuming it comes right back down into the 1795-ish level. Remember, as far as the two kind of best areas that we were really looking for, it was up here and it was up here. These are kind of our extreme values versus dealing with all the chop in the middle. And again, that's just, unfortunately, that's kind of how things work. But remember, tomorrow is FOMC and Fed funds. We're not doing anything with the federal funds rate, but the FOMC statement tomorrow could be the reason why gold is going to stay choppy today. We will have today's longer session as well as tomorrow morning session, as well as another CPI reading. So it'll be two CPI readings before that FOMC statement. I think that's going to, again, the transitory inflation is just, people are just not believing it anymore. And it's funny, in fact, of believing it, I found this article just popped up right before we started. I don't know if you can see it here, but it says, we could have been more honest with the markets, the ECB, Holtzman said. So, the new guidance in the ECB was, maybe a step too far. So, you're hearing a lot of kind of debate back and forth. It's not the hard line. It's disappearing. It's fine. We're good. It's an interesting time in the market. So I would say, wait to see what the kind of opening print looks like. And again, oil is another one of those ones that had a very, very small day. So again, we'll talk about it at 12 o'clock. But again, this is a little scenario. We know what the little, the little big scenario looks like. This is a very little, right? And we've had 2 days of basically very little movement. Most of the movement is coming in the overnight. And then once the actual sessions start, it just kind of flatlines on us. So again, if I forget to mention it later, make sure we look at that.
We'll remind you.
Yeah, we have the oil. We have the first oil inventory. The API oil inventory report later today.
Yeah, I mean, meanwhile, it's the summer quiet, but there's a lot going on, creating a lot of opportunity or potential opportunity in the markets. So with that, any questions for Nadex, please email us, customerservice@nadex.com. Questions for Brian, you can get him at support@keeptradingsimple.com. And by the way, it does look like we might have had some minor technical issues today. We're running this over the internet, so hopefully this all, if it's recording, it's all recording well.
We can only hope, right?
we can hope. In the meantime, I want to remind everyone that we do have the full-blown session today in 3 hours. I sent out the link in the chat. Other things to remember: 10 a.m. consumer confidence, NASDAQ might be in play with Microsoft, Apple, and Google earnings today after the close. And then some ideas, and Brian will cover it again today, later this morning or this afternoon, that Australian inflation number tonight, 9:30 Eastern. So opportunities for potential trades. Join us back in a few hours. With that, I want to thank you for joining us this morning. Good luck in the markets, everyone. We'll catch you again in a few hours, and if not, tomorrow morning. Thanks.